this is Josh Taylor with Trade Advisor Pro, and I want to thank you for checking out our video today. Now, before we get started with today's free Forex training video, I want to give you a chance to pause this video right now and go to our website. Trade Advisor Pro offers you free Forex training videos, and trade alerts. And folks, you do not want to miss our trade alerts. We send out a bunch of trade alerts every month that are top rated in the industry, where we send you our exact trades right to your inbox. Pause the video now. Go to tradeadvisorpro.com/free, and all you have to do is register and then come back to this video, and we'll be sending you a lot more goodies to help you with your Forex trading. Enjoy today's training video. Hey folks, this is Josh Taylor, and this is going to be the first video of many in a series that we're putting together called Forex Trading for Dummies. Not saying that you're a dummy, but basically giving you the basics so you can really start looking at the market the way that I do. And let's start off here. This video is going to be short, and we're going to be adding a lot more videos to this series, and they will all pretty much be short. But the information here is going to be solid from the basics. If you're looking to understand how the bankers trade, how the major players in the Forex market trade, this is going to simplify a lot of things in your life, especially if you're really struggling with the market. So first thing I do, if you look at my charts here, I use IntelliCharts, these unbelievable charts. And because the one thing I like about these charts is I can lay out things like on the 4-hour. I've got a lot of pivot points drawn out to get an idea of where the market's at, potential bounce opportunities. And as you like for instance on this, I'll zoom this in. This pound dollar, you can see that price came down on the 4-hour chart, hit the M1 weekly, and bounced right off. So you can use pivot points, and we'll get into pivot points later in some other videos. In fact, in my online training course, if you went and signed up for the free signal service that we offer, we'll show you how you can get the training course, which is normally a $595 charge. We'll show you how to get that for free. The training course is very in-depth on how we trade the markets. It's pretty good. We're constantly adding new material, but we'll get into pivot points at a different time. But let's look at how I look at the market. As you can see, I have different charts set up. The main charts that I use are focusing on the daily, weekly, and 4-hour charts. Now here's the thing. This is especially if you don't want to be staring at charts all day, which tends to trigger a lot of emotions, and people tend to buy and sell, and that's when they usually get destroyed in the market. So if you really want to trade the market without having to stare at charts all day and simplify your life, right? Forex trading should add more financially to your life and simplify your life, not make it more confusing. Then I'm going to show you how to trade from the daily charts here. Now let's take a look at here. The first thing I do is I look at the weekly chart. I'm trying to look at the weekly outlook of the pound dollar in this case. And you can see that the pound dollar likes to bounce between 153.50 mark and 163.00. Okay, and that goes above for a while, eventually breaks it back down. But you can see it's pretty much bounced between these levels for quite some time, and it continues staying in there. Now recently, each one of these candles represents a week. The red candles represent that the week was down. The blue candles represent the week was up. So for the past 2 months, the market is turned around, and we are seeing an uptrend back on the pound dollar. Now here's the great thing. Price, as you can see, price. Now historically, let's talk about this. Historically, price tends to respect what we call key levels. And this level, 153.50, is a key level. What's that mean? Historically, if you zoom this down, you can see that price hesitates and struggles all in this area a lot, right? Once it bounces off. This time it broke through pretty solid. And that was some news announcements that caused the market to shift. But what happened is once that shifting changed, the market is now gaining strength. So the pound right now at this point is gaining strength against US dollar. So right now, the market has done two things. Number one, it has begun an uptrend. All right, the market is moving up. How can you tell? Where is it going? It's pointing up, right? It's moving up, and it's broken above the 153.50 mark, which you can see it hesitated, couple days, struggled here for a while, for a couple weeks, I'm sorry, and then it finally broke through. And once it's broken through, we have a solid base level. Now, if price would come back to 153.50 again, wow, that would be a great opportunity to buy. But what we noticed was, let's stop with that. We know that we're trending up. There is a saying in the market: the trend is your friend. Now and that means you're much safer buying in the direction of the trend. But just because the market's going up, 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 doesn't mean you just start clicking and buying. Let me give you an example. Let's go to any of the yen cross pairs, and we're going to talk about the pound yen. The yen has just been going up, 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 up. Now let's say you're sitting here going, wow, holy smoke, and this is a daily chart on the pound yen. This thing has been going up, up, up for the last 5 days, just exploding. And what do? You click, you buy. What happens? Bam, the thing dropped 500 pips, actually 600 pips in 2 days. Why? That is called a retracement, a market correction. But look where it came down. It came down, touched, struggled at, and eventually broke back up at this previous low, the 147.82 mark, 147.80-ish, right? Price hesitated, broke a little bit below. That's why you have a stop to protect yourself from these. But even at the end of the day, the market on both days closed above the 147.82. That was a sure sign that the market was about to pop back up again. Okay, it went back up. What did it do? It struggled again and bounced back off of the previous high. So do you understand how that works? And how do you draw these out? It's very simple. You see major lines that seem to be hit often, and you draw out those levels. And these are what you call key levels. The more times a key level gets hit, and more times a level gets hit, then the more strength that's going to have to cause a potential bounce. Now, what do you do in this case? Since the market's trending up, trending up, trending up, you look for an opportunity for a pullback, a retracement for the market to come down, and you take a buy entry here. Now, we had a buy entry set here. The market never came back down. It continued shooting up. And so we actually just entered this trade just right at this line here, the 153.60 mark. And the trade is down a little bit, a few pips, but we see a lot of weakness today. We did have some pound weakness overall, but I do expect that this trade, since it is trading up so strongly, that will continue, especially if I can see this candle close for the day. If the market closes above that 153.65 mark, I'll be extremely happy, and I'm expecting the market to continue shooting up. So let's get back to our pound dollar, and we're going to keep this today's trading very short. Trading off the daily charts. Now, what we had here was the market was going into a sideways channel, which we talk about in other videos, but you have a solid base level over the last week and a solid resistance level over the last week on the daily chart. So what we did is we took a buy opportunity here at the 15500 mark. Now the candle is down, the market is pushed down because we did have some pound negative news that forced that thing down, but you can see that the wick is getting longer because the current price is beginning to move its way back up. I do expect that we should close today above 15500. At that point, we should see this trade run up to the 15600 range, at which we are going to go ahead and close out some profits and move from there. So the big key that we're talking about today in Forex trading for dummies is that we are trading off of key levels. I trade daily using the weekly, daily charts. If you can't find something on the daily chart or you see the opportunities, what you can do is go down to the 4-hour chart to start looking for entry points. So that's it for today's video. Today's video, the wrap up is going to be start focusing on trading more long term using the weekly, daily, and 4-hour charts. Use your weekly to get long-term direction for the trend. Daily chart to dig down not only the trend but where the key levels are that you're going to be trading, and the 4-hour chart to get your exact entry so you can use tighter stops. Alright, so that's it for today's video. We're going to be adding a lot more in here, so continue to watch these videos and subscribe to our channel. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free Forex training videos, and free Forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.